The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. As always, we'll start out here with the German DAX and the FTSE. And as you can see, these markets, although they were down, were not doing anything like what we were doing last night. At around 10 o'clock, Tucson time, we had heard that the news came out that the president and the first lady had their tests positive. And, of course, you see that we had a huge drop, over 500 points in the Dow Jones, 60 handles in the S&P, and about 300 points, almost 300 points in the NASDAQ. And the NASDAQ is approaching the 78% retracement of that last move that we had. I wanted to bring that up because, you know, the overall NASDAQ is really still, let's get it up here right here so we can all see it. Here's where we were last night. All we did yesterday with the thing going on here is we just took out the highs that we made in early September after the big break that started on September the 2nd. But the key level to watch there is that 78% level. Comes in around 11,260 or something like that is where it is. If we start getting below that, that would be the lows of last week and early this week, and that would be a sign that, yeah, we're going to get a little bit more of a correction. But actually, it didn't break very much. I happened to be right on air when that actually happened, and I didn't know what was going on, so I had to turn around and see what Bloomberg was showing, and then they said that, and I said, well, that's what's causing it. And I went in and I just did a quick calculation saying if we get below 3290, 3300, then we could probably have some more to the downside. But the market they've held up relatively well given the fact that we've had something like this. I heard a reporter yesterday on one of the news channels because I was surfing just to see what the difference in news was, and one guy said, "Oh, this is Trump just pulling a gag to show how strong he is, so he can work through the virus." Well, folks, that guy works 18 hours a day every day, so I don't think he cares whether anybody worries about how he works or not. But that's neither here nor there. So anyway, let's just move on and talk a little bit about yesterday's talk about what happened when these markets explode due to news items like we had in the grain markets. But folks, look at this. This is not good, and we talked about this yesterday. Look what's happened to this, folks. This darn thing. Look at the wheat over there. Wheat's already dropped 25 cents from the high. The beans have dropped 18 cents from the high. Corn hasn't moved very much. It's only dropped about 8 cents. But this is with one of the most bullish reports we've ever seen. That, to me, that really means something. So let's keep in mind that this is not acting good, because when markets don't go up on really bullish news, they only have one way to go, to the downside. And someone asked me the question this morning, because I talked about this, is why didn't I send out a sell signal? And I sent a video out, and I said we need to give it a couple of days just to see it, let them adjust to the news, because it is so unusual. And so what I will do now, because it's out there and everybody's looking at it, we're having terrible weather over there in China, more rain. And so they're going to have to be buying more grains anyway. So all I'm going to be doing now is waiting for a pattern. That's all I look at. Folks, make the patterns as simple as possible. Now, this morning, I always like to look in the den just to see what the folks are talking about, just so I can get a flavor for the flavor of the day. Whatever they're looking at today happens to be COVID-19. By the way, Shane Smolian will be our guest at 9:30 today, which will be a lot of fun to listen to what he has to say. But a gentleman posted a chart in the room here today, and I was going to feature that chart, but I said, I better not do that, because people would probably think I was being critical of it. And I wasn't being critical of it. It's just that it had so much information on it that I don't know how the person could make a decision. I mean, I really didn't. I was really I was really shocked. Amos Hofstadter, who was one of the greatest traders, anyway, I don't mean it to be negative, but I mean it to be just to keep it as simple as possible. Remember, now I'm a technician. I don't look at any of this other stuff. But at the same time, this is what I was looking at this morning with all this news going on. I mean, this is not rocket science, but here's the most actively traded chart in the whole world. This is the euro. This puppy trades $1 trillion a day, boys and girls. And look at this head and shoulders pattern from Wednesday to Friday. You've got a perfect head, exactly distance from the left shoulder to the right shoulder. The right shoulder, 61% of the head. I mean, what else do you need? And it's already picked up, about $400, and that's with there's no oscillators on there. And oscillators are lagging indicators, folks. And some people are really good at using them, and I mean that sincerely because I see what Steve Rhodes is. He's he's on the list of one of the best traders at the Timer Digest all the time. Basil Chapman is absolutely fantastic at it. I don't listen to Tom too much anymore because it's too late in the afternoon. I'm usually done by 11 o'clock in the morning. But those guys know how to use those, and I'm just saying they're just not for me, and I've not been able to work it into my armamentarium of looking at. I have to tell a funny story about this, and that is Mark and I were here one day, and I had a guest in from South America. And we were into the second day, and we were having a really good day trading. And this is when we were using the 50-inch monitors that I don't use anymore because they're too bright and too big. And I hit a wrong button on the Ensign thing. And when the chart popped up, it had every single indicator that Ensign had in their machine. I mean, every single one. Oscillators, Gann lines, Andrews lines, everything. And it was colorful. It looked like something Picasso might have made. And the guy was sitting next to me, and Mark was behind us, and he said to me, "Oh my God!" He says, "What's that?" And Mark said, "Oh, that's Larry's $35,000 private trading platform." And he said, "I'll take it." I swear to God. I sold it to him for $34,900. Anyway, that's really what it was. I mean, and you got to be really careful. Now, just to give you an idea, I know you've all heard of Jim Rickards. Okay, he goes with the what do they call that group? The Bill Bonner's group. I can't remember what the heck the name of it is. Shucks, I can't even remember the name of it. Starts with an S. But anyway, he brought out a trading system for trading options, okay? And he sold it for $3,700, I believe. Do you know how much money they took in on that, folks? $20 million. And it was nothing more than selling premium. That's all it was. I mean, it was just amazing. But they took in $20 million on that. And that is a lot of bread. You can eat out on a couple nights a week doing that. So anyway, that's it. Yes, I see that the chief of the compound, Mr. O'Brien, is saying that he is a fraud, and he's been around for a long time, but who knows? I don't know. I've never bought any of his books or anything like that, so I really don't. That's what it is. Okay, we got a break coming up here.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, let's get back to talking about what I was doing yesterday. I spent a lot of time talking about the report that we had in the grains, wheat, corn, and beans, and the importance of it. Folks, I didn't spend a whole hour on that for my own for my own use. I hopefully it's for you. As a technician, you have to be able to read what the market is trying to tell you, and two things that you can really absolutely hang your hat on for sure. One of them is that when the market has really, really bearish news and it can't go down, for God's sakes, don't short it because it wants to go higher. And if it's really, really bearish and it wants to go up, you just can't fade it, folks. Somebody in there knows more than you. I tell you, it's truly amazing the things that you have. In 1987, during the crash, okay, I think we had 1,600 issues down on the day, and there were 9 issues that were up. Now, that's with the stocks down 16%, okay? They were down 16% in one day. 16% of where we are right now is around $4,800 in the Dow, down in one day. Now, we're probably going to see that sometime in my lifetime. Well, I shouldn't say that because I'm at the 8th furlong pole, but it will happen again. But remember, there were 9 issues that were up that day, folks. Can you stop and think for just a second how bullish those people have to be? They must know something that they're willing to buy those 9 stocks. And I followed those for a month or two afterwards, and they really moved. I mean, somebody knew something in those stocks. So that's what you're doing is when you're getting market feedback, is you're trying to, to see what the market's really trying to tell you. Because as a technician, all you can do is look at the bar charts. The oscillators, that's in history. That's a mystery. That happens in the past. You got to see what's happening now. So you just look at that, and that's what you're really trying to see. We focused on wheat, if you remember, making that 3 drive to a top. So that's it. That's what you're supposed to do is buy strength and sell weakness in quantity, as they say. The key is where do you enter, and that's it. Okay, so we had a pretty good break in copper yesterday. Did the copper get down to the 295 level? Because I thought there was some pretty good support at that level. I don't know if it if it held that level or not, but we'll see. Shucks, I can do that right now. Let me get this up here. I got my data running today, finally, after all this time. It's been a real pain in the old kabuki, as you can imagine. But I think we're up and running now. And where is the old copper? There it is. We'll get this up here. Oh, well, by golly, we did. Let's get this up here and take a quick look at it. There's it. Boy, there's a perfect example. You don't need anything more to, wow. Thank you for bringing copper up, boys and girls. This is absolutely a perfect chart. This is one we looked at yesterday. This is a 4-hour chart, and it's having one heck of a move here. And we made the big ABCD to the downside. Holy cow, holy moly, guacamole. Maybe this stuff actually works. Let's take a look at it here. There's your copper. You can see the 3 drives to a top pattern. You can see the ABCD on red on the left. Market comes down, makes a perfect Gartley at the 61% retracement on October 1st, which was yesterday, and it goes from 304 all the way down to 284. That's 50 points, which is that's 10 grand. My goodness, it sure is. And then we broke it, and now we're rallying back a little bit, but that's an ABCD, folks. I think, let's see, it's $250 a point, and it's 50 points. Yeah, that's $10,000. That's a hell of a move in one day. You can eat out a couple times if you do that. That's amazing. But it's a perfect ABCD too. Now, I don't know what's going to happen to all this stuff, but by golly, it certainly looks like that's a pretty easy one to look at. And we're having a good rally. So let's ask the question now. If that is complete and this is bearish, the rally should rally right to the 382, and that's where we are this morning right now. So we're at 292, which is the 382, and that makes it rhyme every time. I's a poet and don't know it. Let's get this up here and take a look here. Believe me, folks, I'm not on drugs. I'm just high on life. Okay, you'll see the copper right at the 382 now at 292. And whether that's going to be the end of the rally, I don't know, but that's a good spot if you want to be short copper. It's also where the old lows were back on the 24th. So that's all lining up perfectly. But whoever said that, let's see who said that about copper. Thank you very much for bringing that into the the meeting here, or so I can review what we were talking about on some of these things. Someone asked me a question by email last night. They had enjoyed to hear the story of the, when I was moving up with the beans back in 75 and 76. And they asked me about, bad stories. Like I said before, I don't have a whole lot of bad stories. I can remember one of the most vivid ones that I remember was in 1974, early 74. I was in the Promenade in Beverly Hills, which was Rodeo Drive. It later became Rodeo Drive. They didn't call it that at that time. And I was still working with Eli Lilly, and I didn't like working for Eli Lilly because I like trading, and I was at the top of my game. I had a 7-figure account, and I had everything. I was leaning up against a brand new Mercedes, and it was just, life was good. I had it just had everything taken care of. And then, of course, 9 months later, I owed Tanti $2,700. That was probably, in retrospect, I remember sitting there that day because I had tears in my eyes. And the reason why is that I was thinking that I couldn't do anything for my mom because she passed away in 1970, and here I had all this money. And, I bought a few things for her, a truck and stuff like that when she was still alive, but I couldn't do anything, really super good, like, really nice house or something like that. So that's why I felt that way. And later on, 9 months later, it happened. I never went through any psychological testing after losing the money. What I did do is I went back to Indiana, and I talked to my original guy that got me started doing this, Jim Noblet, and he actually laughed at me, folks. And he said, you think you're so smart now? He said, you really won't learn anything, until you've done what you've done at least a couple times. And I said, shut the front door. I didn't say that, but I said, I don't believe that. And he said, no, it's true. He said, the quicker you learn these lessons, he said, the better off you're going to be. And, of course, he was always a big component or proponent of the book Reminiscences of Stock Operator by Jesse Livermore, because if you don't want to live these things yourself, read that book, because that's exactly what you're going to go through. I mean, he's no different than what you're looking. You're going to meet the same types of people. You're going to go through the same psychological stuff that he did. And I literally have read that book 50 times, and it's always a good book. I keep that book right next to me on my nightstand. And when I can't sleep, which is almost every night, I read a few pages just to remind me, where we are, because I don't want to go through that kind of stuff anymore. Now I'm more risk averse than I am anything else. So anyway, we've been trading. The market's been open. Oh, wait, the stock market's not open yet. It doesn't open for another few minutes. Take a little break here. God darn.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're featuring Shane Smolian, thewolftrader.com on the line. Shane, how are you doing today?
Morning. Is this Duke and Duke?
This is it. The office is 100 South Broad Street. You're at the home office. What can we help you with today, my friend? Tell us what you're looking at.
Well, I'd like to start out with the COVID, as we always do. So I'll do a few slides on that, and we'll get into some other markets. Obviously, the big news today is that President Trump and Melania tested positive for COVID. So our our prayers and wishes go out to them for a speedy recovery. And, we don't want this to affect anybody. No, I know this is a political season and everybody is getting very aggressive, but I think this is a time to take a moment and just say some prayers and really just understand that we're all in this together, guys. That we all have to get along, and any of these problems that happened before the election, before Trump, they were already there. So, I just hope that people can just take a pause, just even for a second, and just, pray for them to get better.
Words well said, my friend. Go ahead.
I mean, in the end of the day, we are all in this together, and and we need to remember that we're the ones that have to change the world. So, this is just, maybe we can just have a moment here. Anyway, so Biden to get tested this morning, so there's a chance that Biden could have it too. So this creates a crazy month for October. Trump is not incapacitated; he's working from home, and so that's good. So maybe he'll get a lighter version of this. Now I have a COVID transit that I track, and it's actually turning up like tomorrow. And this is dealing with the Aries point of the world, so it's coinciding with this positive test. So I don't think that's a coincidence. The Aries point deals with the world, and I tracked this COVID transit as it came across during March. So the cases will likely start to rise again now. So I'll show you a glimpse of this transit. This isn't the full transit, but this is just showing what we talked about. We had a peak in August the 5th, and that coincided with a peak in cases. So now we're actually hitting a low again right now around October the 3rd, and I think the cases will start to uptick again. And so the Aries point deals with the world, and this transit has been coinciding very cleanly with what's been going on with COVID. This is one of the transits that I track. Obviously, that triple conjunction, the Jupiter, Saturn, Pluto, is affecting this. This is a very strong energy affecting the world, but this is turning up now. So I think that's interesting that he tests positive right when that's turning up, because again, the president of the United States is affecting the world. Schools are beginning reopening. So that's going on right now. Amazon reports 19,000 workers got COVID. The U.S. test rate is around 5.6%. So that's good. That's good news. I mean, I think it's going to start going up again, but that's what it is right now. And then the House passes the stimulus bill, so we're really waiting to see if that can go forward. The COVID cases were at 7.3 million, 207,000 deaths. So that's where we are. And these are the cases here. Now, for those of you who follow the newsletter, you know that I track the actual percent of positive cases of people being tested. So we're actually, look over here on the chart, we're actually at about 5.6% right now, somewhere around there. We just hit an all-time low on September 15th. But again, I do expect this to start ticking up again in the coming months in October and November now. And again, I give the specifics in the newsletter in terms of the dates, and I update that daily. But that's important because, that's going to affect things. It's going to affect sports. We already saw an outbreak with some NFL teams. Now, if we go over to the Fear and Greed Index, this is the first time now that we're starting to see some fear in the market in a long time. Even with that pullback, there was not too much fear. When it pulled back, that big dip that we saw down around the 23rd, 24th, 25th of September, it only got down to like 50. So now it's interesting. It's actually higher, and the fear gauge is going lower. So that's, from a contrarian standpoint, that's good for the market. That's a good sign if you're a contrarian and you want to see this market go higher. This is a graph here just to show you the actual zigzagging of this transit here. It's not transit, it's the Fear and Greed Index. So it came all the way back down now to 40. So I think this is a good, healthy pullback here. We definitely needed to work off some of that over-optimism up here at the top. And it seems like people are starting to show that now. So S&P update. So President Trump's positive COVID throws uncertainty into the situation. Today is a poor statistical day for the S&P, so just keep that in mind that today is generally negative. October is a relatively positive month from an astro standpoint. So now a lot of astrologers will point out that there are a lot of hard cardinal transits this month, but sometimes those can be actually bullish. We saw that with the cardinal climax where the market actually got bullish with Bernanke. And then there's a retrograde Mercury on 1013 to watch. But overall, before this COVID Trump thing struck, I was feeling pretty bullish about the market. I still feel pretty bullish about it. I'm going to get into some charts in a minute here, but I'm going to show you the planetary speed index here first. This is actually coming into a low right now. So the planetary speed index hit a peak on the 17th of September, hitting a low around October the 5th, which is like Monday. So we're essentially coming into some type of a low on the planetary speed index. So that's good that this news actually comes in on a low point. So in other words, we wouldn't want that to come in on a high point where the selling could accelerate. I also tracked general combined transits, which it's something similar to the Bradley, but it's a little more accurate. It's got more information. That's coming in to a low today on the 2nd. So I have us coming into some lows from an astrological standpoint. We're coming into lows, not highs. So, I think the markets need to digest this information. So let me tell you about what the Fed is doing. The Fed has been very erratic, and the Fed has been pulling back on the juice over the past month. So we saw in September, the Fed juice was in the sell, but it really just didn't want to go down. And the Fed juice did go back into a buy on the 30th of September, and the dollar juice also went into a buy on the 30th. So both of those are now in a buy. So this sets up a positive October for equities. If the Fed juice remains in a buy, I think we're going to have a positive October. But again, there's more uncertainty now that Trump has tested positive, and Biden might test positive too. So, that could change things up. So we just got to, we got to stay in the moment with that. But, the things that I look at here, this is my chart here with the S&P. I do have the Fed juice here into a buy. If you look down here, I have this in a buy. It's in a pretty clean buy. It crossed up. So these are my indicators. As long as this is in a buy long term, I still feel pretty good about this market. You can see back here on September the 17th, back into here. This is when that planetary speed index went into that sell, and the Fed juice went into that sell back here on the 11th. But now we're actually, like I said, we're headed up, and we have these lows coming in today, and we have a low coming in Monday on the planetary speed, and the Fed juice is in a buy. So, long term, based off of my gauges here, I'm just going to focus on what I know, which is the Fed juice. This does look pretty bullish. I think this looks good. I think we have a chance to rally here, provided, something catastrophic doesn't happen. I just based off of these indicators, I feel pretty good about the market.
Hey, that's very good. We're going to take a little break here, pay a few bills. We'll be right back with Shane Smolian, the Wolf Trader. We'll be right back, folks.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're chatting with Shane Smolian, the Wolf Trader. What do you see, my friend?
Well, thanks, Larry. I have a chart here of the Fed just to show you a zoom of this. I show this every day on the update, but I feel pretty good about this. I feel like this is a pretty clean cross that we got. I don't feel like it's wishy-washy right now. So, like I said, I feel pretty good about that. Plus, the dollar juice is headed higher. So, for those of you who don't know, the dollar juice is another indicator that we use that integrates what's going on with the U.S. dollar with the S&P, and this isn't a very clean buy too. So, I feel good about it. I mean, looking at this, I was very happy that actually cleared up because, shorting the S&P is really, really difficult, and it's a lot easier to make money to the upside. So both of these are just, moving higher. That's good. People have questions about the metals. I have a bunch of different services, so let me just talk about the metals very quickly. Copper showed weakness off the highs. The Fed use and the CAT on copper modeled that perfectly. We actually had that turn called beautifully on the copper. It decoupled with the S&P, which is interesting because the copper usually goes. Now, gold and silver are still in negative seasonals, but the dollar juice is in a sell too. But the Fed juice on gold and silver went into a buy. So the stimulus might actually send the dollar lower and metals higher. So we got to be careful about the stimulus. Now, this is the actual copper chart here. So I'm just going to show you here. So the Fed juice has been in the sell since September the 17th. So it did a very good job of modeling this. And then we actually had this sell on the 30th on the CAT. The CAT master signal is one of the Astro signals that we use. That's a combined. So it picked up this decline beautifully. And then yesterday we actually had that CAT signal went into a buy yesterday, and so it picks this up beautifully today. So copper's been modeling beautifully on the Fed juice, as is silver and gold. Now I'm going to show you silver here. So silver has been it came off its seasonal high, and notice the Fed juice was in a sell since the 17th of September, and then on the 20th we had a retrograde transit there, and then we had the big disruption. It came down. The CAT calls that bottom on the 27th. But the thing that I'm very interested in here is that the Fed juice did turn up. So that, to me, that is really important because the Fed juice has been modeling these metals beautifully. And when that turns up, that's telling me something, Larry. I think that they're going to try to do this stimulus, and I think a 2.2 trillion or whatever they're trying to do could really send this dollar down, and that could have a positive effect on the gold. So, I mean, it was going down, but I think this popped up yesterday on that stimulus news. So you kind of have a tug of war going on because the seasonals are trying to point down, but the Fed juice is pointing up. So gold and silver are kind of in this strange situation, but I take the Fed juice seriously because when that turns up, the markets are trying to tell us something. And so there's somewhat of a confusion here, but it is trying to turn up. Now, the currencies, the U.S. dollars has been in this buy since the 14th. Most of the other currencies are in a Fed use sell because they go opposite of the dollar. So, for example, the euro has been in a sell since September the 8th, the Australian dollar since the 9th, and the pound since the 4th. So if the stimulus is passed, it could send the dollar lower and other currencies higher. So here is our dollar. I'm using colored charts here, Larry. So I know you're a big fan of the white charts, but this is how I identify my symbols. The dollar has been in this buy, so the dollar is still climbing higher. It's been modeling very well since the 14th here. It's just been climbing higher. But again, that could change. Like if they come out with the stimulus, I think that could really send the dollar lower. So it's kind of a tricky situation right now because, you know, what goes on with this stimulus really affects the markets in the world. So this is the Australian dollar. I just started adding this one, but it's been modeling the Fed use very, very nicely. It started out a little rough, but you can see here on the 10th that the Fed use went into the sell, and then it had this big plummet here, and then a rebound up. Now, these other white arrows here, this is the Catmaster signal here. This had a buy on the Australian dollar on the 27th, and then it just came into a sell on the 1st of October. But that's still pushing lower. The euro is still also pushing lower. The euro has been in this sell on this Fed use since September the 8th, and that's pushing lower too. So that's something to watch. I mean, if I just went by the Fed use, I would say this is still continuing lower. As is the pound, the British pound. The British pound has been a little bit stronger than the euro, but again, this is still in a sell on the actual Fed use. So, you know, as long as that dollar is going to climb, these are going to fall. But like I said, the dangerous thing right now is the stimulus could cause these sharp reversals, and it could cause the dollar to plummet. So, if the dollar starts to plummet, you're going to see upwards pressure on equities, upwards pressure on metals, upwards pressure on currencies. So these are important things to watch. Now, cryptocurrencies, I'm going to throw in some Bitcoin here. Bitcoin's nearing the end of some negative seasonals. The cryptocurrencies tend to fall into this point and then they bottom. It's been in mainly a sell since age 12, but now it's a buy. So Bitcoin looks relatively stronger than gold and silver. So here's Bitcoin. I know this chart looks like a little bit crazy, but the main takeaway here is that the Fed use has been in a sell for most of this chart here. So it went into this sell in 812. So this whole time during this pullback, there was a couple of wobbles back and forth here, but for the most part, the Fed use has been in a sell, and now the Fed use is actually in a buy on this. So to me, this looks like it could be set up along with gold and silver to rise if the dollar starts to fall. So to me, this looks a little bit stronger than gold and silver just by looking at the chart. So we will see what happens with that. So that's just kind of an around the world view here. I do also, on the gold, we watch the bond. So the bond, this is the 10-year. The bond once was a stable rolling instrument, but since COVID, it has become very erratic with the Fed bond purchases. But there are some hidden trends if you look closely. If you use the Fed use, you can see these trends on the bond. So the bond is in a buy on the Fed use since 9/25. So this stimulus could affect the bonds too. So the bonds are actually on a rise. I know they kind of pulled back here when the market rallied, but the bonds are actually in a little bit of a rally here with the Fed use. The Fed use is also modeling this here too. So one of the things I want to say about the Fed use is that the Fed use is really for longer term trends. And so it does very well across the long term, but it's not always going to catch the exact turns of the market. So we can go back to the S&P here. And we can see that it was actually a few days late on this call off the top here and a few days late off the bottom. But across time, the Fed use does tend to give you these bigger moves. Now, it does better to the upside on the S&P, but the Fed use is really what I consider to be the gold standard in terms of longer term forecasting. And then that gives you the longer term momentum of the markets. Now, the medium and the shorter term, that really is where the Astro comes in, and we try to combine that with the Fed use to get a better outlook. But to me, if I just looked at this S&P right now, like I said before, I really feel like now that this Fed use is heading into a buy, and we have these Astro lows coming in, I think that we have a chance here, Larry, in October. I really do. Let's hope that nothing tragic happens with President Trump and Melania, First Lady Melania. But just by looking at the charts, like you always say, trade what you see. From what I see on these systems, this looks like a pretty decent setup going forward.
This is really good information. Can you stay with us for the last segment, my friend?
Sure.
Shane Smolian, wolftrader.com, folks. We'll be right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're chatting with Shane Smolian. Shane, we have a question from one of our listeners, and that is regarding the Bradley model. You don't seem to take much credence in that. That's what the question is. Is that correct?
Well, I mean, I feel like the Bradley can be very positive if the Fed is weak. Right now, the Fed is getting stronger again. I mean, we're in a period of quantitative easing, so I just would say that when that stuff happens, when the Fed gets really, gets kind of crazy like that, the Bradley, it's hard. It's a lot harder to work. Now, when it turns up with the Fed, the Bradley can be very good. But, based on what I'm seeing, I really believe in this Fed juice. I mean, this is like something that, that I track across time. I keep records on it. I have, I do optimizations on it. We do a very special optimization that we've developed that helps look into the future. So all of these indicators are optimized. Larry, I'm a systematic trader. this is what I do. I design trading systems.
Yeah, you sure are.
So this is the Fed Juice to me is the single best gold standard I've ever seen for the S&P. I mean, that's just my opinion, but I collect the data on it. I share it with subscribers, and it's just spectacular. I mean, I really trust it. So I feel like when that's headed higher, we have a chance to go higher. So I'll just leave it at that.
Okay, that sounds fair. You want to tell the folks how they can reach you?
Sure. So you can reach me at www.wolftraderfutures.com or www.fedjuice.com. And you can also email me, Shane@wolftraderfutures.com. And there's a live chat over there. You can chat with me. People come over and chat all the time. I'll take your questions. I do return every single chat and email. It may take me a day or two when things get busy, but I will return your email if you send me a question. There's a free email list you can sign up for. So go over there. I do send updates like when, there's radio show appearances and whatnot. We do have the 6 letters. They just came out, by the way, yesterday. We just came out with the October editions. So we have S&P, we have metals, energy, currencies, and cryptocurrencies, and all of these have Fed Juice technology. And then I have the Uranian astrology edition too. We talk about the election.
Hey, listen. Thanks for joining us, my friend. We'll have you on again soon. Shane Smolian, folks.
WolfTrader.com.
You bet.
Stay safe.
Be safe, my friend. We'll see you all Monday.